Thanks so much for tuning into this very special conversation of Markets Mandate. Over the course of the next few weeks, we are going to be dissecting what could the possible ramifications of the election verdict be on markets, economy, and more. On this leg, we're going to talk about the equity markets and risk assets and what could there be in store over the course of the next, let's say, 5 weeks and the next 5 years as the new government gets sworn in. And to talk about this, we have with us three very esteemed gentlemen. They look at equity markets through various cycles and various elections, both globally and locally. Mr. Nilesh Shah, Mr. Hiren Ved, and Mr. Mark Matthews. Gentlemen, all of you, thank you so much for taking the time out and being with us. Nilesh Bhai, can I start off with you? It's a big verdict of sorts, even though some people will argue that the verdict came in as early as December, and this is merely a formality of who gets elected. I would love to think about how are you thinking about the election from one, what could happen in the near term, yes, and two, what would be a 5-year, 10-year ramification of the new government coming in?
So today India is one of the most expensive or highly valued market in the peer group. And that confidence to pay higher valuation comes from the fact that everyone believes India will be the fastest growing major economy. And more importantly, economic growth will also convert into profitability growth for corporate India, unlike in many other parts of the world where economic growth didn't translate into corporate profit growth. So the base fundamental for the market in terms of expectation from the government is to continue faster growth, continue higher corporate profitability growth, and continue best governance.
Got it. Okay. And in that, I mean, you know, the conversations can vary from what could happen to the policies that have been continuing with an assumption that the current dispensation comes back to power, and what could be the newer things that would come into place as well, innovative things that could come into play as well. Are there hopes that you're penciling in on either of the two ends, Nilesh Bhai?
Undoubtedly, keep on doing the good work like fiscal prudence, like out-of-box thinking, which we saw during COVID time, and also keep on improving on things which have not been attempted so far. For example, farm law reforms, for example, rationalization of subsidies, for example, focus on manufacturing growth. Essentially, if we have to summarize India's challenges in one line, about 10 to 15 crore people are working in agriculture. If they're removed from agriculture, I doubt there will be any material impact on output. But if they are employed in services or manufacturing, our growth orbit can change. Now, this can't be achieved overnight, but is there a roadmap to achieve this? Faster growth, better governance, and higher corporate profitability. These are the trico on which markets will be evaluating government's next steps.
Okay. Now, I have a question. Mark Matthews may not exactly understand up ki bar, 400 par, but Mark, what I'm trying to ask Hiren Ved and then to you is that will the extent of the victory make a difference? Up ki bar, 400 par, Mark Matthews means can the BJP or the NDA go over 400 seats this time? So, Hiren, can I come to you? Will up ki bar, 400 par matter, or will the markets be happy with the majority government coming into play, enacting the policies the way markets would want them to?
You know, it's quite interesting. I think this government coming with a comfortable majority should do it. But maybe in the short run, because to use our stock market or corporate language, there is a forward guidance which was given by the Prime Minister of 360 for the BJP and 400 for the NDA. Certainly, these are the two numbers that you know, everybody will look out for. Again, you know, predicting elections and seats is a science in itself. I don't think I'm qualified to do that. Only thing that I would say is that if somebody of the stature of the Prime Minister has mentioned these numbers at the floor of the House, I'm sure that there is a lot of confidence and backing in their calculations for him to kind of give a number like that. But is it going to be like earth-shattering if they get 380 or, you know, it could well be 420? I really don't think so. I think as long as they get a comfortable majority, I think the willingness to do what they want to do is there, and there should be a fair continuation of policy.
Okay. And Hiren, would the fair continuation of policy be good enough for our markets to sustain the valuations? And then I'm going to go to the relative valuation question with Mark. But to you, in absolute terms, we are not cheap, yes. But is that good enough to validate the valuations? Because then the markets will believe that there is policy continuity, hopefully no disruption to the earning growth trajectory that India has had. Will that be good enough?
So, all things being equal, I think when you do good work, right, there is some immediate impact, but there is also a far-reaching cumulative impact that kicks in, right? So I think, for example, what we are seeing in GST revenues today is a result of formalization of the economy and better compliance that has not achieved one shot, but it has happened over a period of time. So my sense is that the continuity itself should create a certain momentum, right? So for example, a lot of private sector capex programs and projects, I think will continue to unfold. Question is, what else can this new government do, which is an unfinished agenda? That can only add plus to the growth. Having said that, the thing about earnings is that sometimes it's nothing to do with the policy, right? Because let's take the example of fiscal 22-23. So for example, when the Russia-Ukraine war broke out, commodity prices rallied, and companies which use commodities saw a hit on their EBITDA margins, right? And obviously earnings for the broader market got impacted for a while. And all of that reversed in 23-24 as commodity prices normalized and logistics costs normalized. So sometimes in the short run, you can't correlate what happens to earnings in a particular year to just what the government policy or reforms is, right? Because sometimes some reforms take a lot of time, and how they get realized into corporate profitability is a completely different mathematics altogether.
Yeah, point well taken. Point well taken. Okay, Mark, coming on this, I mean, there is this belief that there is policy continuity, government continuity, so on and so forth. How are you, sitting from where you are perched, look at what the global view would be on the election season in India and the outcome thereof?
Well, the first thing I'd say is I don't think it's particularly important, because unlike, say, 20 years ago, foreigners don't move the market anymore. That's patently obvious in the way the market has performed in the last couple of years, despite foreign net selling. Now, to answer your question, I don't think foreigners do look at Indian politics very closely, because they're complicated and it's hard to understand them. What they know is that this is a pro-business government that has enacted some really deep structural reforms, which are unusual to do in a democracy, because they cause short-term pain, and that's the way you usually get voted out of office. So I would say they recognize the good work that's been done. I don't think many of them know about the potential for further reform. They're just happy with what's been done, and I think they feel that the momentum from the reform that's already been enacted and the plans, with the railroads and electrification and internet and all those other things, there's still so much room to do good work in those areas. And so, long-winded answer, I don't think foreigners are spending that much time looking at Indian politics, but I also don't think that foreigners are the movers of this market anymore anyway.
Yeah, no, that's a fair point. And just before we take that break though, Mark, the consistent opinion that we've gotten from everybody that FIIs are probably waiting for the election outcome to happen before they commit more money. You are saying that is not the case, to your mind?
Yes, I don't think they are paying much attention to it. You know, Indians are always so preoccupied with the budget, for example. I can tell you no foreigner cares about it. Sorry.
Yeah, the budget, I completely agree, but I thought the election was a different kettle of fish altogether, Mark. You completely decrying that. Interesting thoughts. Okay, so we will come back, but while we are trying to talk about the markets mandate and what policy could mean like, we need to slip into a quick break, Mark, come back and try and talk about policy and what it could do as well, because I'm sure that is something that some of the foreigners might be looking at, and earnings growth, of course, where India is kind of scored. Mark Matthews, our global guest, is saying that, hey, foreigners are not quite particularly perturbed by what could happen. So he's kind of killed the show already, but we'll still try and do the next segment to try and just understand what should people still be focusing on per se. Now, Nilesh bhai, come to you. For the retail investor, as you and Hiren Ved saying before the show as well, has probably laid out the ground any which ways that we are disciplined, we are staying put, and therefore, if we've stayed invested in Indian markets, the election verdict hasn't mattered. The skeptic would argue it's not mattered because there has been policy continuing in 2019 and maybe there will be policy continuing in 2024. What, to your mind, would be the most important things that you would want to be seen from the new government if you are indeed investing for the next 5 years? As you keep on saying, that if people are investing in mutual funds as well, don't invest for 1 year or 2 years or 3 years, invest for at the very least 5 years.
So one, do everything possible to sustain growth. We are now growing between mid-single digit to high single digit. Can we aim to take it to double digit? How do you create accelerated growth? One, you have to invest. Please encourage private entrepreneurs to invest just like government is investing. Second, can we improve the productivity of investment? Today, you know Gokhale Bridge in Andheri. It's just an example of how unproductive we are. We have to remove unproductivity and become more productive. Third, this investment needs to be funded. While there is enough global capital available, can we allocate our domestic resources properly? Between FY21 to FY23, Indian savers put 4 lakh crore in mutual fund approximately. But they have put 9 lakh crore in currency notes. I mean, currency notes does not give any return. Why are people investing in currency notes when equity markets would have given 100% plus return? So we have to also improve allocation of our savings. Finally, there is ease of doing business, ease of doing investment. Today, from top-down basis, India is doing wonderful work in getting, let's say, someone like Elon Musk and Tesla. Fair enough. We also have to ensure that our local Elon Musk and Tesla is also encouraged. So how do we sustain this high growth? We are the fastest growing major economy, but let's not be happy with that. Let's target double-digit growth.
Okay, well, cross fingers for that. Mark, would it take double-digit growth for further interest to come in from the global diaspora? Because the headlines are very strong, right, in India. Apple being one of the largest production hubs now, starting to emerge as one of the largest production hubs, 1 out of every 7 phones made in India. Elon Musk and Tesla coming to India. A bunch of others have already come in. The global gatherings, when they happen, everybody talks about setting up the next plant in India. What is it that you would want to see?
Well, just to answer the first part of the question first. I think that the issue with India is the asset class it is located within. Emerging markets has been a pariah essentially for 15 years. And that could change, but I think there's no sign of it changing yet. And there are 2 forces that have caused this. The first is the digitalization of the world economy, sort of starting with the introduction of the iPhone, was massively proportionately beneficial to the US stock market. And the second thing is that China has dragged down the emerging market asset class, and a lot of people who look at these things from afar aren't really able to make distinctions between even something like India and China. They just group them all as one big emerging market asset class. So even if India, starts to do things that are even better and different from what it's done before, unless you're an emerging market specialist fund manager, and there are a few of those, but not many anymore. You probably won't even notice it. So sorry to sort of put a downer on it, but I'm just trying to give you the perspective that I think exists in general among, for lack of a better word, global investors. And right now it's still very biased toward big cap technology in the United States.
No, that's a point well taken. I mean, Mark, we love the downers because it's good to get a reality check all the time, and therefore it really appreciate this frankness. But Hiren, come in. I mean, because there is this whole conversation, right, that Indian money managers are now. Could they be started to be seen as ex-China EM fund managers as well if they are globally managing such stuff? And when people like you going to global funds to get in money into India, is there a wider acceptance than what it was? Mark is right. There still needs a long way to go. But can what's happening in the policy continuity and the earnings growth in India lead to that change sooner rather than later? What's your sense there?
So I think, one has always grappled with, first of all, there is no one homogeneous foreign investor, right? There are ETFs, then there are India dedicated managers, there are global managers who allocate to India, so on and so forth. And each has a certain objective in place. I think beyond the point, as long as India continues to perform, it'll be very difficult for anybody to ignore us. Right? It's like any company or a stock or a sector, for example, if it continues to perform and if you don't have exposure, you're forced to look at it. I mean, to say that, okay, we will change weights in the index and, the foreigners need to look at India with this perspective, I think all of that is fine. I mean, that will, the structure of global capital cannot be changed overnight. I think we have to do what is required. And I think if we continue to perform, global capital will come in. I think one of the other things is that just ease of doing business and continuity in tax policy is very important to attract foreign capital. I think if we continue to work on that, and a lot of work has been done, but I think if we continue our work on just reducing the compliance cost versus not at the cost of quality compliance, but just reducing the compliance cost and changes that we keep doing, I think that itself can bring in a lot of capital, if you ask me.
Got it. The manifesto, Hiren, as it came out, spoke about a few promises, some which were present continuous and some which are futuristic in nature as well. Did you find something which was wherein you would want to see some more moves done and which could actually be really attractive? Because there are a lot of pockets where India still has some room to go before it catches up with the globe. I mean, particularly AI, which is, well, maybe some time away, but even others.
So I think, I have no doubt that in areas of AI and stuff like that, I think, Indian services companies are very smart. They will catch up. Again, 2-3 areas, and since you mentioned AI and since we've been talking about renewables and EV, I think one thing which has struck us again and again is that rather than relying on duties and quantitative or otherwise restrictions on trade, we need to have huge investments in R&D. And just like we had the PLI scheme by the government, I think there should be some sort of a incentive for Indian companies to spend on R&D across the board, whether it is our educational institutions, our research institutions, or private, right? Because if you truly want to be competitive, then you have to spend on R&D. So I think, yes, manufacturing without R&D is just a cost arbitrage play or a supply chain arbitrage play. If we really aim to grow at a sustainable pace and become leaders in certain areas, I think we need to do a lot more on R&D. Obviously, physical infrastructure, I think they've said it very clearly, they will keep on doubling down. But some of the softer aspects, right? So reforms in the judiciary, for example. It shouldn't take 5 years for a commercial case to get solved. I mean, that itself can be a big enabler for private and foreign investments to come in, right? So I think we should now aim, while we continue to do the hard work that we have done in terms of building physical infrastructure and more of the infrastructure and make in India, but I think it's now time to look at some of the more aspirational aspects which are more foundational, like R&D spending on healthcare, judicial reforms. I mean, stuff like that will really go a long way.
Okay. Well, last two questions. I'll end with Nilesh Bhai, but before that, Mark, to you, the final question to you really, and which is, what would you have see the policymakers do? I mean, for the longest time, it was that should there be steadiness in taxation, and could there be policy continuity there? Then there was this ease of doing business, which has been long argued. We've traveled some distance, still some more to go, I'm sure. What is it that you would, or your clients would have India do in order to keep it or make it more attractive than what it is currently?
Well, I'll tell you something very boring because you've heard it a million times, but judicial reform, which was just mentioned, because that would certainly make the ease of doing business better. Agricultural Act, bring those back. That would make huge strides in reducing inefficiencies in the food sector. And then land reform, so that land which is not being used efficiently can be used efficiently. There's so much land in India that's in that situation, and the labor reform, and it sounds horrible, but make it easier to let people go for companies that employ more than 300 people. And so I'm just telling you what you already know, but those are, to me, the four big things.
Okay, Mark, and just to follow up there, I'm just repeating this for sake of a better argument, or for sake of an argument. I heard you say that elections will not make as much of a difference to flows per se. So you are saying that even if the mandate is as the market believes, and that's one hump out of the way, that is not the necessary and the sufficient condition to bring in foreign flows. Other things have to work out, including the EM characterization or rates for that to happen.
Yes, I mean, I'm not saying that's the correct, I'm not saying that's right, but I'm just saying that's reality. That really, to get India back on radar screens in a big way, you'd have to have a major trend change in the performance of emerging markets versus developed markets. And it could happen. It used to happen approximately once every decade. You'd have emerging outperform developed, and then developed would outperform emerging, and et cetera, back and forth. That was happening basically from the 80s up until, I would say, 2007, 2008. Since then, there's just been one massive streak of underperformance of emerging versus developed. So if we can get that to change, for sure, people will want to allocate back into emerging, and I think India would be right at the top of their list. But so far, you have not seen that trend change.
It was interesting. I was looking, Nilesh, at this note from CLSA, which was talking about how while Korea takes the cake for the best EPS growth for the next 2 years, for the consistency, somehow India probably gets rewarded the most, and that's why the multiples are so high. Final question to you, Nilesh Bhai. We've discussed some things that should be wanted, etc., and stuff like that. Assuming that the government does what it has done in the last 5 years, let's say you give the first 5 years for just formation, but the last 5 years there have been policy moves, etc. Assuming it's more of the same, because it is a difficult thing to get things going as well per se in India, do you think that's conducive enough for flows and earnings growth to keep market multiples where they are, or would you hope for something more?
So we get market multiples which are better than others, not only because we are doing well, but because others are also scoring self-goals. For example, you talked about Korea. Now there is a 60% inheritance tax in Korea. There's no incentive for Korean entrepreneurs to ensure higher market cap. There's very, very relaxed related party transactions in Korea. There's virtually no difference between a listed company and unlisted company of the entrepreneur. As long as they score self-goal on corporate governance and we do well on corporate governance, we'll get this valuation. The work done by the government is good enough to sustain this valuation in that paradigm. But if others start correcting their self-goals and they start copying us, then we need to raise the tempo and we should be looking at going double-digit growth. And that's not necessarily just for investors, but it is just to continue this journey in our Amrit Kal to become Viksit Bharat. If we grow at mid-single digit, high single digit, we will become Viksit Bharat surely, but much later than expected. If we raise the tempo to double digit, then we'll reach Viksit Bharat much earlier.
Well, if somebody's got the ear of the people who matter, the man who just gave the answer does. But gentlemen, all of you, thank you so much for taking the time out and being with us on this show and giving us your thoughts. Mark, all the way from Singapore, thank you so much for joining in. And Hiren and Nilesh Bhai, in our studios, special having you. Thank you so much for being here today.
Thank you.
Thank you.
And viewers, thanks for tuning in to this broadcast.